There seems to be a new slogan in the utility world. So we've had drill baby drill for years in the oil and gas land, and if I understand correctly, uh, President Macron of France has proposed a new slogan saying plug baby plug. Maybe it doesn't translate perfectly, but the idea being that Europe is at least trying to encourage lots of development in the electricity space.
EDF, owns 56 out of 57 reactors in France. Um, and EDF is nationalized, so that's part of the state. And a big portion of their nuclear output is sold at fixed rates, sort of as to protect ratepayers, or let's say households, from elevated energy costs. So I would think if Sam Altman's plans disrupt that power supply, or make regular citizens' bills higher, I think that's not a good chance that will happen.
Nuclear capacity in the U.S., there is a lot of hope that about new capacity, but the fact is that you probably won't see a lot in until when the advanced nuclear, like small modular nuclear, are coming online. So for this decade, I think the restarting of the power plants, if you look across all the power plants shut down in the past 10 years, the one that really could be restarted would probably just be the one that that has been announced out there already, the 3 Mile Island, right? And then the Dwayne Arnold that NextEra just announced.
Especially the regulated utilities, they don't want that risk. After what happened to Southern, they recently had 2 reactors for Vogtle. The last one, it was in 2024. And the project itself was supposed to cost, I think, around 14 billion. It ended up going over 30 billion.
So really for Germany, the focus has been on building renewables and trying to ramp up offshore, which is a target that they are slightly delayed on, but an important target for them to deliver 30 gigawatts. And aligned to that, they need to build out really massive networks that not just connect the offshore projects, but also bring the power north to south. So north is where they'll build the renewable projects, and the south is where the demand is.
Good morning, good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. Today, we've got our utilities team from both North America and Europe here on the call to talk about exciting things happening in the utility space here at the moment. So, just running around the call quickly, both in Princeton, New Jersey, we've got Nikki Hsu and Gabriela Privetera joining. Then from the European side, we've got Patricio Alvarez joining from his usual perch in Madrid, and Joao Martins joining from our London office. So, as I mentioned, it's a pretty exciting time in the utility space, at least from my mind. Lots of very interesting things going on. I was joking a little bit before we kick things off here that there seems to be a new slogan in the utility world. So we've had drill baby drill for years in the oil and gas land, and if I understand correctly, President Macron of France has proposed a new slogan saying plug baby plug. Maybe it doesn't translate perfectly, but the idea being that Europe is at least trying to encourage lots of development in the electricity space. And I saw that even Macron was meeting with Sam Altman from OpenAI, and there's speculation that maybe they were talking about having France provide some nuclear power to data centers. So, Patricio, I know we didn't talk about this in advance, but what do you make of that idea? France has a lot of nuclear capacity. Could some of that capacity and output find its way to helping the likes of Sam Altman and others that are trying to rapidly build data centers?
Um, so yeah, hi Rob. So I think that's a tough question, but I think from what I took from these I guess speculations or is that this would probably face a lot of regulatory backlash in France, given that EDF owns 56 out of 57 reactors in France. And EDF is nationalized, so that's part of the state, and a big portion of their nuclear output is sold at fixed rates, sort of as to protect ratepayers or let's say households from elevated energy costs. So I would think if Sam Altman's plans disrupt that power supply or make regular citizens bills higher, I think that's not a good chance that will happen. But instead, what I've also read is that they are planning to build new nuclear, so more reactors in France. Something that is not crazy. I think the fact that more than 60% of Europe's nuclear capacity is based in France, I would say gives some credence to plans to deploy more reactors over the next 5 to 7 years. Although we're talking about EPRs, so these are the traditional sort of conventional reactors. This is separate from other ideas and plans of building small modular reactors, which we don't think will be commercial until the mid 2030s. So I would say is a positive sign. Will it be very simple or as easy, I guess, as straightforward as it has been with 3 Mile Island and a few other reactors in the U.S.? I don't expect so. I think European regulation again will make it very hard for that to be streamlined.
Well, let's ping the North America team because I'm actually not so sure it's straightforward here in the U.S. So Nikki, I want to probe a little bit. There is a little bit of controversy around taking these nuclear assets and perhaps deploying them to help power data centers. So Patricio mentioned 3 Mile Island and their potential agreement with Microsoft, I believe, and then Amazon's also got a deal with I believe Talon that's out there floating in the works. So what do you make? Can we either restart nuclear power plants or divert power from existing nuclear power plants as part of this big theme that's really helped to, I think, generate some excitement around the likes of Constellation and whatnot? You're mute.
Yeah, sorry. Good morning. So for the nuclear capacity in the U.S., there is a lot of hope that about new capacity, but the fact is that you probably won't see a lot in until when the advanced nuclear, like small modular nuclear, are coming online. So for this decade, I think the restarting of the power plants, if you look across all the power plants shut down in the past 10 years, the one that really could be restarted would probably just be the one that that has been announced out there already, the 3 Mile Island, right? And then the Dwayne Arnold that NextEra just announced. Both of them wanted to restart the reactors by the end of 2028. And then the first one coming online is Palisade. That one was actually recently shut down. I think it was in 2022 or somewhere around that time. So probably not a lot need to be done. And that one will be coming online 2025. So with all this capacity added together, and then plus the upgrades from the existing power plants that Constellation Public Service Enterprise they are planning, you would not be seeing a big jump. Like you'll probably be seeing maybe 4 gigawatt of capacity on top of right now it's a little bit short of 100. So it's less than 4% of the growth. So obviously there are a lot of interest from AI data center use of nuclear power plants. And in the regulated market, you're not going to be able to dedicate a specific nuclear power plant to data center, right? So if these AI data centers, they want reliable power that's clean also, right? Because nuclear has capacity factor of somewhere mid 90%. It's even more reliable than the natural gas power plants, right? So they definitely is in high demand right now. But there are only, I think only half of the 50 some US nuclear power plants are merchant power plants, meaning that only these, say, 20 some power plants are available for behind the meter. But a lot of these are in the Northeast. Say, for example, Constellation, about 50% of somewhere probably around 50% of Constellation's nuclear power plants are under state subsidies. So these are probably not going to be available until the state subsidy ends, right? And then they also have some power plants under long-term contracts. So the actual available capacity for hyperscalers are probably very limited out there.
Gabriella, I want to bring you into the conversation. You cover Southern Company, which is one of they're the only company that's brought on a new nuclear power plant in the U.S. in recent memory. Vogtle, I believe it came online last year, but I'm getting old. My mind gets confused on when things happen sometimes, but it's pretty recent. So
Yes.
what was their experience there? I think they had some pretty big cost overruns. My guess is their experience wouldn't really inspire too many companies to probably want to go and invest in nuclear, but you tell me.
Yeah, especially the regulated utilities, they don't want that risk. After what happened to Southern, they recently had 2 reactors for Vogtle. The last one, it was in 2024. And the project itself was supposed to cost, I think, around 14 billion. It ended up going over 30 billion. It took many, many more years that it was as originally planned. So Southern, like its balance sheet, they ended actually divested one utility that now is owned by Nexera. So they went through a lot of hurdles to be able to complete the project. So every single utility probably has that in the memory, and they don't want the risk. They cannot afford the risk, especially considering ratepayers. So if they were to decide, I believe any regulated utility into a large project such as this, they will probably need some support, large support from government entities in order for them to take the risk. Yeah, because Southern, although now it's the risk is passed and both reactors are in operations, the years where they were building it was really a struggle for them.
Okay, thank you so much. Joao, I want to bring you into the conversation on the angle of Germany. So Germany used to have nuclear power plants. After the Fukushima incident, they decided to shut all of their nuclear reactors down, which means they're really transforming their grid, moving. And on one hand, they've taken their nukes offline, but they're also trying to get rid of coal. So what do you make of all of the power requirements in Germany? Can they meet their basic needs with renewables? Could data centers be built in Germany, or can you get enough power there?
Yeah, so as you said, Germany phased out all of its nuclear. It's phasing out coal, and really the answer for the Germans, or in their plans, has been renewables. That demands large power grid connections. So really, for Germany, the focus has been on building renewables and trying to ramp up offshore, which is a target that they are slightly delayed on, but an important target for them to deliver 30 gigawatts. And aligned to that, they need to build out really massive networks that not just connect the offshore projects, but also bring the power north to south. So north is where they'll build the renewable projects, and the south is where the demand is. And within that context, they're in a kind of a difficult situation where you need to expand spending quite a lot. We estimate that they might need to double annual spending on grid build-outs to meet the needs of the projects that they're building. And at the same time, a lot of the utilities that they are involved in this, so E.ON, Elia, for example, they're already leveraged, highly leveraged utilities, particularly Elia, which aims to essentially invest more per year than their entire market cap. So these are really massive undertakes for the companies, and the answer to being able to deliver on this is essentially to find higher allowed returns. In Germany, these companies make money based on an allowed rate of return that they can charge on the assets that they build. That rate has been lowered for the current period, but what we're awaiting on is for future periods, which will be only after 2028 anyway, but for future periods that a new government that will come in February and may be more supportive, finds a way of while at the same time keeping energy costs lower. So it's another complex decision to make, keeping energy costs lower, but also helping these utilities ramp up investments. So that's a key catalyst that we're looking at for the election.
Patricio, I want to get your read on this as well. Every time I see a chart of industrial output from Germany, it kind of makes me shake my head. It's just this downward sloping line, and it feels like energy is a part of the conversation about what's driving that. You know, the story seems to be that Germany has pretty high energy costs, and you've seen industrial output moving to places like the United States. So, how does this feed into the election? Do policymakers, folks running for political office, want to fund all that investment that Joao was just describing?
Yeah, so that's a great question. I think that's the problem, and I think that's why we have read more and more on the on the news flow that whoever becomes chancellor will try and increase the debt break, or eliminate the debt ceiling basically in Germany, because the fiscal situation is dire. So from that standpoint, we don't expect any sort of big investment splash from the government to support higher allowed returns. Like Joao mentioned, utilities have already contested these new rates of return, arguing the same thing. These are very long leading capital investments with very long payback periods, and it's very difficult to resolve, because at the end of the day, you're trying to charge higher fees to ratepayers today to fund infrastructure that won't get built for another 7 or even 10 years. So it is a problem. We don't expect a lot of stimulus from the German government, whoever becomes chancellor. I think from the small, very macro analysis of the policies being platformed by the different parties, I think the only thing they agree on is on trying to lower energy prices. How can that happen? Renewables, I think, are the strategy because of the nuclear phase out. The nuclear phase out, I think, from a technical or an economical standpoint, was not the best decision for them. It does increase their need to burn coal and gas. Recently, the CEO of RWE, which is the largest power generator in Germany, said that actually removing both baseload sources, so coal can be used as baseload as well. So it's like you are phasing out coal and nuclear at the same time, which actually made gas markets in Germany specifically much more volatile than other regional markets. So it is a big problem. I think the door on reviving nuclear has been closed. I think in Germany, it looks like the next chancellor has steadily veered away from the argument of reviving nuclear. I think the AFD is the only party that still supports the reactivation of nuclear plants. Operators have said that would demand very high offtake prices or power prices for that to become feasible. So yeah, it's a hard one. I think the AFD has also spoken about resuming Russian gas supply, which that argument, as politically, dubious it can be, or it's very yeah, polemic. I think that would definitely aid prices, because European gas prices have actually hit a 2-year record low just this week. They almost reached 60 euros a megawatt hour, meaning that they're roughly almost 5 times, 4.5 or 5 times what they are in the US at the moment. And that's just on colder temperatures, mainly because the storage is going to be a bit lower this year than it was the last year. So the reinjection gap is going to be higher. So there's not really a crisis, but it's just a matter that that Europe is a net importer of energy, and resolving that, I think it's very, very hard for the next government in Germany.
Nikki, I want to get your perspective from the US on this build cycle that we seem to be in right now. So there's a lot of capex that the utilities are aiming to spend, whether it's on nuclear, renewables, gas. And I want to get your sense, are regulators being friendly towards these expansionary pressures? And what's your read on kind of how do the politics play into it in America? Are you concerned about perhaps changes to the subsidy regime we've got via the Inflation Reduction Act? What are the big concerns that the utilities are talking about right in the US right now?
So I think there are a couple of things that from the policy standpoint, in terms of the Inflation Reduction Act, how safe the tax credits are, I think most of utilities believe that renewable tax credits should be safe, but no one is able to say, yes, it will be safe, right? But if there is any change, the impact could be very substantial. One, cost will be higher for customers, right? Because all these costs are passed on to ratepayers. And for utilities, it does affect them. It's not a direct impact on their earnings, but it will likely limit their ability to spend. So capex may not be growing as fast. So it's a concern for utilities. And the other thing is the transferability is something that with this capital spending, interest rate, high interest rate, and then inflation, customer bills are already so high, right? So regulators obviously has been very sensitive to rate hikes. If you look at the authorized return on equity in the past couple of years, it's pretty flat. Maybe even if you get 10 basis point or you get to maintain your return on equity, that's a win already. So, and it's this regulatory environment will get tougher across all the states. It's not specific states. So that's one thing. In addition to the tax credit, the Inflation Reduction Act also has the transferability. Sorry, I forgot to talk about the nuclear. We also believe nuclear PTC should be safe as well, but again, you never know. But the transferability is something that also very important because utilities, most of the utility, they get hundreds of millions of dollars per year just from whether it's nuclear tax credit or renewable tax credit. And let's just say NextEra, for example, they actually monetize like more than like $1 billion a year, and they help with their cash flow a lot, right? That could help them to lessen their equity needs. And then Duke, for example, Duke is pure play regulated utility, right? Even for Duke, it's $300 to $500 million a year. And these are all very important for utility to finance their capital spending. So it's likely regulatory scrutiny will increase, will continue to rise. But if interest rate continue to rise, inflation continue to rise, and without the IRA tax credit, it's definitely gonna even accelerate the rate increases.
Yeah, Patricio, this is very interesting. I want to get your read because some of your companies have invested heavily in growth opportunities in the US. Ørsted comes to mind, and I'm curious. Even though we don't know the fate of the IRA yet, it does seem that there's a lot of headwinds for the offshore wind business. How are you thinking about kind of the European names as they eye the U.S.? Are they going to get cold feet and sort of abandon efforts that they've made over the past 5-10 years in the States, or are they still looking at potential opportunities?
So I think a good place to start is just divide perhaps on the types of technologies. I think on onshore, so onshore wind and solar, I think yeah, the Trump administration draws upon those risks that Nikki was just flagging, you know, changes or tweaks to the Inflation Reduction Act's tax credit. Probably wouldn't impact operational earnings from existing assets, we think, but they will definitely narrow, I would say, the growth backlog or the potential opportunities that European companies may be seeking. Although I think in general, the outlook for onshore, both for solar, wind, and storage, I think those are safer than offshore, not only because of the IRA, but also because they can be built behind the meter and because they, you know, they are more, the state level regulation drives those, I would say, more directly than offshore. And offshore wind, that's a completely different story. I think the risks there or the outlook for offshore wind in the US has materially deteriorated, especially amid the incoming Trump administration with the permit freeze on federal, sorry, the freeze on federal permits, that impacts any developer. Not only that, they're removing lands, federal lands in the continental shelf in the east. So that is, you know, those are very, very big blows, I would say. But I think European companies were foreseeing this. You know, Ørsted, I would say, is a poster child after exiting 2 landmark projects in the East Coast in 2023 and recording massive impairments of over 25 billion kroner, which is roughly $7 billion in 2023 alone. And the company, well, Ørsted reported last week, they announced a new CEO that came in with a further reduction to their investment plan. There's still two projects in the U.S. That are being constructed already. So that's Revolution Wind and Sunrise Wind. Both of them have been delayed by a year already since their previous recovery plan started in 2023. So it's not looking very well, I would say, for U.S. offshore wind. I would not discount the possibility of further delays and impairments on the existing assets, but perhaps I would say that my read from the strategy reset for Ørsted is sort of a wait and see type of approach. Maybe things may turn, and they kind of you know, made the targets only disclose targets for the next 2 years instead of having 2030 ambitions and sort of longer term visions. Maybe because they want to wait and see if the policy you know, reversal in the US is not as bad as expected, but definitely not looking great for offshore wind.
Sounds good. I definitely want to circle around the group and sort of get some readout on kind of 4Q results and how to be thinking about 2025. But I just want to come over to you, Joao. Just, you mentioned this idea of building 30 gigawatts of offshore wind in Europe. And I think this is a really interesting idea that folks in the industry are wrestling with right now. We know the US is kind of hitting pause, at least for the next 4 years, on offshore. But we hear much more optimistic things out of Europe. And I'm curious, you know, is Europe really going to be able to make up for the US reticence to go into offshore? You know, are those 30 gigawatts going to get built offshore in Germany? I mean, I think they have this whole plan to build all of that and do electrolyzers and create this hydrogen economy. I mean, it's a very interesting vision, but it's very unproven, untested. So, you know, if you had to give your up-down read on this, do we approach anything close to that level in reality in your mind?
Yeah, I think 2025 will be very important to answer that. So it's not just offshore. In Germany, they also have a target to build 10 gigawatts of new gas plants, as you said, should be ready, hydrogen ready. And all of that has been delayed and kind of now awaiting the new government. Um, there's several auctions that will happen this year for offshore. Last year, they were not great in Europe either. In Denmark, the auction for offshore didn't award any bids. And so this year, we're watching out for new auctions in the UK, in Denmark, also in Germany, for any signs that this is actually going to be built, because we're in 2025. These projects take a while at potentially up to more than 5 years in some cases, if you look at the offshore delays from Ørsted to build. So really, if they're not getting awarded now, the answer to your question is going to be no. We're probably not going to meet those targets. But there's still a lot of commitment from policymakers. All of the targets are still in place, although potentially the rhetoric has been a bit more technology agnostic lately, akin to the US, but the targets in Europe are still in place, and we also don't have a lot of other options. With, as Patricio said, in Germany phased out nuclear. We're aiming to phase out coal across the continent, and so really the only growth option to meet potential demand from AI and all these new trends is renewables. And so if offshore is at potentially more at risk, I think onshore is less so, and will have to be part of the answer to that.
Thanks, Joao. Okay, so let's do a quick round robin here and get your read on the earnings cycle. So, Gabriella, I'm going to come to you first. I'm just looking at your coverage list. So, for anyone listening to the call, there's a function you can type called BIP. It stands for, I think, Bloomberg Intelligence Primers, and you can look up any one of us, see which companies we cover. And so, Gabriella, look, I'm looking. You've got Southern Company, Exelon, AES, a number of quite interesting utilities. What are the big themes that you're expecting to hear about in the earnings cycle, and what are the big challenges for 2025 for your portfolio?
So, like Nikki mentioned before, like all utilities keep rising their capex plan every year. So, and there are a lot of needs. Like obviously, with power demand is just fueling all those needs further. But we also have to modernize the electric grid. So there are a lot of components that are driving those investments. And then the question is like, how are we going to like fund all those increase in investments? And then what are the options? Are they issuing more equity? Are they going to slow dividend growth? Are they going to sell some of their assets, like recently did American Electric Power, for example, selling a minority interest in some of us on transmission assets. So he had those all that play together also when you then connect it to the electricity rates that the ratepayers are paying. So all these components, how utilities are going to balance and satisfy all the different shareholders. And then we have to differentiate with AES versus the other regulated utilities. AES is a different kind of animal. They have assets also outside of the US. So it's a little different in their case. So I'm going to be very interested in listening how the new administration is impacting all the growth that they're seeing on the renewable segment, which is where they are betting for their growth for the company. So we'll have to see.
Since you mentioned dividends, I'm just curious, what kind of dividend yields are utilities offering these days? You can just give us a sort of general range, not a specific company.
Oh, I have to.
No,
think
it's all
it's like
good.
low. Sorry, you can hear me? I think it's low to me, 3% right now.
Yeah, okay.
So it's
So it's not. I mean, it's not super high relative to historic norms. I take it. So Nikki, let's come to you. Same kind of question. You look at your coverage portfolio. What are the big challenges and opportunities that you think the utility management teams will be talking about as they disclose their 4Q and annual results?
So I'll just talk about the industry-wide topics, the key themes. The first one will be obviously the data center demand, the sales growth forecast post the DeepSeek announcement, right? So far, not many utilities have announced earnings, but so far it seems like these management teams, they are saying that there's really that there are no changes to their sales forecast, right? And they continue to believe, say, for example, Excel, CMS, both have data center contributing at least 50% of their sales growth. And load growth continue to be very strong. As Midwest and Texas are seeing robust data center customer contract. They continue to sign this contract, and the way that how they forecast their sales seems to be continue to be very consistent. Like they only include the one that they have signed contract or they have visibility they will be signing contract. So it's pretty consistent with what before the DeepSeek announcement. So post and after, it's pretty similar. And the second would be the tariff impacts, right? Most utilities, they have no exposure to overseas operation, but they do import equipment from China, and then you also have some energy import from Canada. And Mexico. But overall, they believe the exposure will be manageable. Some estimates of their exposure to overseas supply is probably somewhere around 10%. So it's likely manageable. And the third thing would be the pivot to natural gas. Obviously, NextEra already announced, and then the announcement for the company to actually sign a deal with GE to build some new gas power plants, right? I think it's signed with for maybe a couple gigawatt, I believe. So they are going to have a 50% ownership with GE. So that tells you that for a renewable giant to pivot into natural gas, gas is probably going to be something that's gonna benefit the most with this AI demand. And then obviously, Constellation acquired Calpine. Calpine is pretty much a natural gas generator, right? So it seems like the industry is recognizing the importance of net gas for the demand to supply the demand. And then the last one will obviously be wildfires. None of the California utilities have reported, but we're expecting the wildfire fund, the solvency of the wildfire fund, and the framework of the wildfire fund to be questioned, like how well it's protecting the 3 California utilities. So that's why we are trying to go through each earnings call, and we'll get back to you next time.
That sounds fun. Let's definitely come back on it because that would have been. We probably could have done a whole call just on that topic, and I am curious to see what happens. So we'll get you back on one day soon to let us know how that's going. Joao, let's come over to you. Contrast a little bit. When you look at your coverage over in Europe, what are the big themes and topics that you're expecting on the sort of readout for 2025 and beyond?
Yeah, so I think a lot of those factors actually impact our companies as well. But one thing that is going to be very different in Europe is that we've gone through a period where energy prices came down from the peak of the energy crisis. But recently, as Patricio said, not just gas prices, but also power prices have recovered significantly versus last year. So we're in a situation where, particularly for pure play power producers, whether that's renewables or thermal, their selling prices are still coming down because hedges roll over, but there's the spot prices at which they're able to sell merchant exposure have recovered significantly versus last year. So that will be definitely a very interesting theme for 2025, and that might impact consensus prospects for 2025, which have obviously come down quite a lot due to these expectations of lower prices, which may now not materialize as much. So I'd say that's one key driver to look at for our European utilities.
Patricio, I want to get your readout as well, and maybe just frame a little bit for me in your mind. And what kind of investors in Europe are looking at utilities these days? You know, is it folks who are chasing an angle on the energy transition? Is it folks who want stable dividends? Is it what is the sort of central thesis on folks looking at European utilities here at the moment?
Yeah, that's a great question. I think because because I think that view has shifted. Um, I think if we spoke about this maybe 2 or 3 years ago when interest rates, in 2020, when interest rates were at a record low, I think you could have claimed that some of the utilities in the stock 600 were growth investments because they are pure play renewable developers. So they had CAGRs in the mid single digits for capacity and earnings. I think that period is we're past that period at the moment. I think we're in a period of capital restraint in trying to mend balance sheets, like Joao mentioned, the spending needs for grids, because Europe is sort of in the next stage, if you want to call it, of the energy transition, where it seems we have perhaps saturated several markets with intermittent renewables already, and that's why you see slower gains in onshore wind and offshore wind, because solar has really really saturated several markets in Europe, like Spain and well, France has nuclear as well. So we're in this in this period we're entering grid investment, and grid investment is defensive. So we're talking about the traditional grandma investment. Dividend yield is the most important thing. Just for size, the stock 600 utilities index is the EPS is going to be flat in 2025 versus 2024, largely, well, partly because of what Joao said, because a lot of power producers are seeing their earnings still normalizing from the energy crisis, and grid investments take a while to show into higher EPS gains. So that's kind of how I would characterize. I would say utilities have become boring again in Europe. We're talking about traditional investment. The dividend yield in Europe is a bit higher than in the US. It's roughly 5% for the index. But that said, it's a stock pickers market more than ever. I would say there are some companies with stronger EPS profiles, and then you have sort of the laggards, which are some thermal power producers and obviously the renewable pure plays, which continue to face steep headwinds.
Okay, fantastic. So we hold these calls every Wednesday, and we rotate through various members of the team. Sometimes have external speakers. So next week we're going to have the group of analysts within BI who focus on the integrated oil majors. So we're going to have Vince Piazza join, who covers Chevron and Exxon. We're going to have Will Hares join, who covers the likes of BP, Total Energies, Shell, on down the line, the European energy majors, as they like to be called there. And we're also going to have Salih Elmaz join, who covers Saudi Aramco and some of the other big names in his region. So please join us for that. And if you have any questions for any of us, we're all green dots on the terminal right now. So just shoot us an IB and follow up. We're happy to speak with you as questions arise. And last but not least, many of you are participants in our newly launched energy chat, BI Future of Energy. It's a sort of cousin or companion of the long-standing BI Energy Exchange, which tends to have a more oil and gas focus. So if you're interested in utilities, you're interested in the energy transition, including gas, maybe consider joining that chat. So any one of us here on the call can help you get included in that. And we look forward to being in touch. So take care, everyone, and we'll see you next week.